Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings, ladies and gentlemen. Right now, just brief look at the gold market and directly to the core of the current situation on the gold market. So you can see, yes, the gold has shown the really impressive jump up. Although we have discussed this moment that probably market could show some upward action and take out these highs on intraday charts, but of course we haven't expected such sort of action. At the same time, I have to warn you and be careful with this action. Personally, I have some really flaws with this upward action recently, and these flaws of two different qualities. The first quality is the fundamental. I have checked the news and data on the gold market recently, and what I have seen, first of all, the physical demand is still weak. The premium on the China market has decreased to the $1, and this is really not very fascinating and absolutely doesn't support the demand on the gold market. The holdings of the SPDR fund has dropped approximately for the 2.7 tons on the recent week. So the demand on the physical market, as it was on the anemic, and it remains anemic. So there is no support from the real demand on the gold market for this recent rally. What's the trigger of this rally? The rally is just a rumor, and the geopolitical some concern that Russia accumulates the 20,000 of the soldiers on its borders with the Ukraine. But guys, the geopolitical tensions when they lead to significant moves on the gold market usually is very short-term and unstable, and it's really the big risk to rely only on the rumors and on some geopolitical events that currently hasn't led yet to some really drastic situation or conflict acceleration, or to some other negative moments that could be absolutely treated as the rising in the turmoil, rising in the conflict. And from that standpoint, it seems that market just has tried to stay flat, has tried from some sort of the stability and from some kind of the indecision situation. The market was really a sideways, flat, and so on, and it has led, and that it seems that market just trying to catch any news, despite how it really significant or insignificant, any news to trigger any action, to trigger some action on the gold market, and that really has happened. That is what about the fundamental part. Technically, currently, guys, the situation becomes more clear. Recall what we have said recently. It seems that market should move higher because we said this bullish engulfing and so on, reversal possible. But recall that our concern was with uncompleted A, B, C, top, D targets that stands below these lows. As with this smaller A, B, C, top, D pattern that market has not quite reached. But take a look what we have got yesterday. That is the bearish stab grabber, guys. Market has tried to shift trend bullish, but failed, return right back down. And also, guys, take a look. That is the weekly pivot resistance one and confluence resistance 1305, 1307 on the daily gold. We know that when the market stands in the bear trend, if any retracement will start, the weekly pivot resistance one holds the retracement. So until price stands below the weekly pivot resistance one, the bearish trend treats as intact and it's still valid. And take a look what we have. Yes, this candle looks impressive, but it has no real foundation at the back. It has no real demand on the physical market at the back. That is just nervousness splash on the gold market, just emotions. And emotions very often has the tendency to fade fast. And that's why I don't want to say that this is just fake jump out and it will definitely fail. I do not know that. Maybe not. It will depend on the further development of the conflict, because currently, you know, guys, today the Fogh Rasmussen arrives in the Kiev, and that will be some conversation, that will be some discussion and so on. It's currently very difficult to predict geopolitical turnings, we can't do this, but we see the technical issues, and they not quite bullish yet. They just warn us that this really could finish fast, and market really could fastly returns right back down. And from the technical point of view, this stop grabber stands absolutely in a row with the untouched targets of this ABCD, because the target of this grabber is taken out of these lows. If this really will happen, that will let us to understand, in this case, the picture becomes completed. So we see grabber, we understand that market could return right back down and complete ABCD targets. And in this case, our concerns of these ABCDs will be resolved, right? But at the same time, what we could do with this thrust up, because it's very difficult to take the short position with this thrust up. I'm not calling you to take absolutely the short position. You could do this because, in fact, there are some reasons for that. And the very attractive and really the temptation here to take short, because your invalidation point will be right here, slightly higher than the weekly pivot resistance one. It's very close, but the potential profit will be here. It's more than the $25 per contract. It's really huge distance to the destination point, right? And risk reward very attractive. Besides, since here is a significant resistance, if even market will not reach this level, it probably will and will continue to move higher, but it probably will respect this resistance by at least some retracement down, maybe to the weekly pivot point. And this will let you to move your stops to the break even. And if you will be wrong, the market really will be bullish and will taken out of these highs and continue to move high, you will lose nothing. That is the attractive position, and that is the attractive situation when you have the confidence resistance and the weekly pivot point on your back. And I think that currently is more safe to take short position rather than taking long position here, due to the reasons that I just have said. Still, since we do not know, the tensions around Ukraine are really significant and really explosives. It's really big rush around it. Anything could happen. And if you do not want to take the shorts and you would like to take the long position, probably it's better to wait at least to either retracement or to taking out of these highs and erasing of this grabber and moving above the weekly pivot resistance. If this will happen, that will be at least some confirmation that market has really significant bullish intention, some really bullish support, and is ready to continue to move higher. That will be some signal, some sign of the strength of the market. But right now, it's a bit unsafe to take long position. If you do not want to take short, that's fine, because it's really difficult, even psychologically, to take the short position after this thrust up. And I do not call you to do this, although, as I said, there are some reasons for that, and it really could be done. But do not struggle with this pattern and do not struggle with this resistance right now. Wait at least when the market shows some retracement. That's the major idea on the gold market right now. On the 4-hour chart, you also could see that market stands at agreement, because market has hit the 1618 extension of the most recent ABC bottom pattern. It's 1618 target, and it now turns to the retracement. That's been said, if you're aggressive trader, you could try to take the short position here, because the probable gift that market could give you, if you will be right, it's really tremendous, since market if we will be right and market will complete this grabber, you will get the just very significant profit if market will reach this area. But your risk will be relatively shy, just above this weekly pivot resistance one. That is for aggressive traders and for those who have the bearish view on the market. If you would like to take the long position, two possible scenarios. The first scenario, wait at least till retracement will happen, because market at the significant resistance and agreement, some respect of this area should follow. Or if market will show the breakout, wait for the breakout and the erasing of this pattern. Do not take the position against this stop grabber. That's just very significant risk with that. Wait when the market will vanish this pattern and move above the weekly pivot resistance. In this case, that will be also the confirmation that previous trend has been broken if market will move above the weekly pivot resistance one. And that market really has serious bullish intentions if market will pass through this area. That's the second scenario. That's what I would like to say about the gold market, and just have to warn you that it's not quite simple situation with this recent thrust, although it looks extremely bullish, but by its nature it's not quite really bullish.